Understanding, Adjust for Inflation, a simplified guide. Hello, everyone. Welcome to our English language learning channel. Today, we're going to break down a commonly used financial term, adjust for inflation. This concept is not only vital in economics but also pops up in everyday discussions about money, prices, and the cost of living. Stick with us to understand what it means and why it matters to you. Inflation is the rate at which the general level of prices for goods and services is rising, and, subsequently, purchasing power is falling. In simpler terms, inflation means things get more expensive over time. If you've noticed that $1 buys less than it used to, that's inflation at work. To adjust for inflation means to change the monetary values from past years to reflect their equivalent value in today's dollars. This adjustment helps us understand how the real value of money changes over time. For example, earning $50,000 in 1990 is not the same as earning $50,000 now, due to inflation. Adjusting for inflation shows us the true value of that $50,000 in today's terms. Adjusting for inflation is crucial for making fair comparisons over time. Whether we're looking at wages, prices, or economic growth, adjusting for inflation allows us to see the real changes, stripped of the effects of rising prices. It's like comparing apples to apples, ensuring that the comparisons are meaningful and accurate. Adjusting for inflation involves using a specific index, like the Consumer Price Index, CPI, which measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. By applying the CPI, we can calculate the value of past amounts in today's dollars, giving us a clearer picture of purchasing power and economic changes. Let's look at an example. Imagine a movie ticket cost $5 in 1990. Fast forward to today, and let's assume the average movie ticket costs $12. By adjusting the 1990 price for inflation, we can determine whether the cost of movie tickets has truly increased in terms of purchasing power or if the change is simply due to inflation. We hope this video has helped demystify the term, adjust for inflation, and shown you its importance in understanding economic and financial concepts. Adjusting for inflation helps us make sense of numbers and trends over time, giving us a clearer picture of the real value of money. Thank you for watching, and we look forward to helping you navigate more English language adventures.